Hey everyone, welcome to the week review. Last week the pump continued relentlessly. This week maybe we get the pullback that I've been calling for quite a while, but didn't come to pass. Uh, on the daily, we're making bread divergence, and we have the Freebird indicators I use are all making lower highs or actually going lower while the market is going higher. This was the top was earlier, but let's say the top is on December 2nd. And in spite the market going higher since then, breadth has been going lower. This is one. The other one is this one, which usually when there were the other indicator was showing a divergence, this one wasn't showing necessarily. But plus we didn't get a breadth thrust like this one. These are generally very good to take long. And on this leg up, we haven't gotten a push up. We even did a negative crossover again while going higher. And finally, the McLaren oscillator, same thing like this one. We topped out on November 25th, and we've been going down ever since, crossed into negative territory. Uh, the thing is, it's so low, like it's as if a correction has been happening, and because of that, there are actually two scenarios. One, more rotation, no more. We got a couple of weeks back, like post-election, we had a huge rotation into other stuff from non-tech. Last week it was all tech, and because it was all tech, um, 1 week performance, yeah, mega caps, and everything was red. This is why breadth has been going down. So there are two scenarios, one in which the market actually goes down together, and the other in which we get another leg of rotation. So this one's become red, this one's become green, and the market goes nowhere as well. So SPY basically stays at the top. We have a bit of a correction in Qs, and IWM goes up again. And this is kind of supported by positioning on a daily level. Uh, let's say SPY is on the upside of equilibrium, like 608, 610, but hard to go above 610. I don't think we do. Um, SPX, we're again upside equilibrium. In theory, we should go to 595.50. This is 6170. I don't think we see that this week, or this is just today. The week it looks different. For Qs, we are way far, and we have this huge magnet at 510. Like Qs looks to me, and we'll see on the weekly, like it wants to test 510, and IWM hugging 240, but on the weekly, SPY same kind of thing, like we are between 606 and 6010. Uh, this is a huge wall that I think it's impossible to break through anytime soon. Like, we would need to go lower to go higher, basically that kind of thing. So we would need to go at least to 600 and then bounce there and maybe push through 610, but I don't see it. And you see it on the weekly on SPX. This is a huge magnet. I think at some point we will push towards it. And Q's 510, biggest level by far. We are very overextended, and this will draw us. On the other hand, we have 245 as a possible target for IWM or 240. So this is the two scenarios, one in which IWM pulls back with the rest of everything and we go down together, and that would be 240 target, or in which IWM outperforms and we have rotation from mega caps on and generally tech semis into this, and SPY basically stays high. So the reasoning being, this is so low that it should get a bounce here, and the bounce would mean uh, that generally what is red here will have the market rotate into it. Okay, another interesting thing to observe is VIX. I tried to buy more VIX on Friday, and it went down 5.69%. We went below 13. which I still think is the floor, but obviously overshooting is possible. Uh, I still like this setup. It's not, nothing has changed, but I try to get filled at a better price. Like I got in at 1.8 on Thursday or Wednesday, I don't remember exactly. And I assumed that we would go lower because VIX was going lower. But no, you can see that VIX on Friday was making higher lows and going higher, like it closed in spite of being down almost 6% and closing below 14, which we didn't. Like this was the bottom last time. Uh, Contracts for this is March 17, 20 call. The price went higher. So this is again a bearish sign, and I I think we will get some sort of correction. It's not going to be big. Now moving further in the future, a big aspect of corrections is that people should not expect them. An expected correction, it means people are hedged and they don't go a long way. So the fact that everyone expects a big correction in January will make it not be big. Like I still think we get a correction in January, but more like 5-6% or not at all, or not 5-6% is fine, and then we go higher. But that brings in two other scenarios. One in which for the correction to be unexpected, it would have to happen now. Not now, but now in December. No Santa rally, like we go down big into OPEX because people won't expect it. It will catch them unhedged. The reasoning being they wanted to hedge like in the last week of the month or something like that, and everyone is prepared for the Santa rally. If the Santa rally doesn't come and we actually push a bit lower, we will have the same as effect as BTC at 20k, at 100k, sorry. Meaning people think it's a breakout, they go uber long with leverage, and where the fuck is Bitcoin? And you get this kind of reversal. So, oh my god, Bitcoin broke 100k, let's go long with leverage. It goes up a bit, then it corrects, and all the idiots that went long at 100k get get margin called and get liquidated here. And this is a kind of scenario that can happen as well. And if it gets to a certain threshold, it accelerates down, it doesn't bounce because more and more liquidations happen and so on. So we have a scenario in which the market can correct now, and if it doesn't correct now, in December, I mean, I think it's very unlikely we get a big correction in January because everyone will expect the big correction in January. It will happen, obviously, but it won't be very big. Like between 5 and 8% would be my assumption. And because January passes, then the actual correction windows becomes February, March. Because again, that will people will go long again because we corrected in January and it was small. People start laughing at bears again. Oh my God, market only goes up, shit like that. They go crazy long, and then bam, February hits, and that's when the correction actually comes and is going to be bigger. And uh, what I mean by big correction is at least 15%, ideally around 20-25%, but 15% would be the base case for something like that. Uh, and we are getting to this point now, like VIX isn't at historic lows here or cycle lows here. We're making a higher low relative to this, and I still think 13ish will be the bottom, plus minus 0.5. VXN, which is the Nasdaq VIX, is almost a cycle lows, like it's retesting the cycle lows. Also looks very like, what are the odds that this goes down another 10-20%? Very, very small in my opinion. And this is the kind of move that uh, gets reversed very strongly at some point. So something like this. Like a move here is due. And I'll go back to VIX. basically there are two ways where this happens, meaning a sudden move up, like for example, we have the setup here, this, and a big spike up, or this, and a big spike up, or this, and a big spike up. This is one way. The other way is by making a series of higher lows, and like this, and then we have a build up, which can last many months, in which we make higher lows, and eventually we have a big spike. Uh, in my opinion, we are moving towards this, not a one-off and then a big spike, but I could be wrong. If we get a December correction, it will look more like this, like we go down and then we have a big spike and then we go down again. If we have a build up towards a move down in February, March, it's going to look more like this. Like we have a small spike now in December, then we have a bigger spike in January. We go down again, we make a higher low, and then we build up toward a big spike that will come in February, March, more likely than in January. So those are kind of the scenarios and how I'm thinking about it. Um, and yeah, that's kind of it for this week. From a layout perspective, we need to retest this. So this is not a projection, and I'll do it on US 500. I'll do it here. Not a projection, just a broad-based kind of thing, more like. So if we need to see this, then I think we make a lower high. Maybe something like this looks like a good horizontal level. Like 605 become resistance, we go to 602, 603. 605 becomes resistance, and then I'm sure we will lose this um, AVWAP band and actually go to this one here. This will be the beginning of a correction, and it can happen very easily because just like with Bitcoin at 100k, system is super leveraged. You all saw all the data on Twitter about people being max long, being super euphoric and optimistic about future stock prices. Uh, a flush like this can happen basically in 10 minutes because leverage will get uh, punished. And then we do something like this. We we can go back higher, we can go back lower, I don't know. But this is one scenario. The other scenario in which we go sideways. And the other scenario is, and eventually we will do this as well. This other scenario is in which we rotate from tech again and into IWM, small caps, all the smaller stuff. So this is the other scenario. Uh, Generally, these are the two scenarios we can expect, and that's kind of it. Okay, have a good one. Bye bye.